Hi, everyone. Thanks for joining us for a review of the top-down and bottom-up analysis of the markets. I am Mike Golembesky, and I'm a senior equity analyst at AAPL, and joining me today is Zach Manis, lead analyst at Stockwaves, a service within AAPL. I'll be giving a broad, big picture overview of the equity markets, specifically focusing on the Nasdaq 100, while Zach will be taking a more in-depth look at what he's seeing in the sectors as well as individual stock names. Before we get started, I do want to take a quick minute to discuss our methodology and how we analyze the markets and the stocks that we look at. So as you may have already guessed from the name of our company and our website, Elliott Wave is our primary form of analysis. We apply Elliott Wave along with Fibonacci Pinball to all of our analysis. And Fibonacci Pinball was developed by the founder of AAPL.net, Avi Gilbert. Unfortunately, we don't have a lot of time in this presentation to get into the inner workings of Elliott Wave and Fibonacci Pinball. However, we do have a very comprehensive educational section within our site and our service, which is more than worth the nominal subscription cost to our site.
There's also a number of education materials that are free as well, that you can access without even signing up.
So a quick background for those who may not be familiar with Elliott Wave theory. Elliott Wave theory is a technical analysis method that uses chart patterns and attempt to measure the sentiment of a particular financial instrument. Ralph Nelson Elliott theorized that public sentiment and mass psychology move in 5-wave primary trend moves and 3-wave within a counter trend move. Once a 5-wave move in public sentiment has completed, then it is time for the subconscious sentiment of the public to shift in the opposite direction. And this can be seen in the counter trend corrective wave. This is simply the natural cycle within the human psyche and not the operative effect of some form of news or exogenous event.
The other important thing to note is that Elliott Wave is fractal in nature. So you can see that there's 5 waves here, and that 5 waves makes a larger wave 1. So you have a small wave 1, 2, 3, 4, 5, and that creates a larger wave. So there's the same structures are recurring within those larger structures. And so that has a lot to do with how we do our analysis.
So within Elliott Wave theory, we can further refine the chart patterns with the addition of Fibonacci Pinball. And again, Fibonacci Pinball was a method that our founder, Avi Gilbert, developed. And in Fibonacci Pinball, we apply fibs to within the Elliott Wave chart patterns. And this provides the individual analyst with a more structured approach to analyzing chart patterns, thereby making some of the subjectivity in Elliott Wave, taking some of the subjectivity out of Elliott Wave as a standalone tool. And again, there's quite a bit to Fibonacci Pinball, and again, we have a pretty comprehensive education section that goes over this in more detail. Okay, so with a little bit of background on how we do our analysis, let's take a look at our current view of the markets. And again, I'm going to start with a focus on the Nasdaq and the tech sectors, and Zach will dig in a little bit further into some of the more refined approaches. So taking a look at the Nasdaq 100, we can see again, we're looking for 5-wave moves in our Elliott Wave analysis as our primary trend. And in this particular case, we're in the midst of a 5-wave trend. So as we can see from the March of 2020 low, we had a primary degree wave 4 that bottomed in that low. And from that bottom, we saw an initial wave 1 up off of that low, and then a wave 2 bottom, and then a larger degree 5-wave move. So again, as Zach noted, Elliott Wave is fractal in nature, and we saw that initial wave 1 complete, and then we had a larger degree wave 2, and then a larger degree wave 3, which just recently topped in the fall of 2021. And as we were approaching these upper fibs, we were laying our Fibonacci Pinball levels out, and we can see that we were closing on a number of degrees of Fibonacci price resistance levels. So we were looking for a local top around this region and a pullback, and for the market to pull back. This is indeed what happened, and we saw a very sloppy corrective wave structure that ended up bottoming recently here in March of 2022. And we had a lot of signs from a lot of different markets, from the equity markets, from individual names, from the volatility markets, that were really giving us a good signal that we were really near a bottom. And so we were looking for the pattern to complete in the March of 2020 lows. And from there, what we're looking at now is we're looking for the completion of an initial 5-wave move off of that low to give us further confirmation that we have indeed struck a larger degree bottom, and we are on our way back to all-time highs. And we are looking for that wave 1 to complete up towards the 15,500 region. And currently we're sitting in the middle of that move. We still need a little bit more action here to get a full 5 up. And this chart was actually from last night, so we did break out a little bit higher today. But we do need to still complete a wave 3 and a wave 4 and a wave 5 to give us a full 5 up off of the lows, giving us further confirmation that we do need to have a bottom in that with the recent lows here in March 15th. But so far, everything is suggesting that a bottom is indeed in place. And as long as we hold over the support regions noted in this particular case, 14,413 on the Nasdaq to 14,189 is our support zone. As long as we hold over that support zone, we are looking higher and looking to complete a larger degree wave 1, which should give us further confirmation that we have indeed struck a low and the Nasdaq is on its way to new highs, which should set up a bullish trend over the next couple of years to finish off our larger degree move off of the March of 2020 lows. So that's a quick overview just of the NASDAQ and the NASDAQ 100. Zach's going to dig in a little bit in more depth into what he's seeing in some of the sectors and individual names, which are supportive of what we're seeing on the larger degree equity charts as well.
So, the title of our talk is being top down and bottom up, really gives you kind of a feel for how we're approaching the markets in general, as well as individual stocks. The index charts are a combination of hundreds of individual stocks and the sectors. But at the same time, they're not only just a sum of the parts. People trade index ETFs. There's a push and pull that the equity indexes themselves have on the individual sectors and individual stocks. So we do often say each chart on its own, but we look for some common threads and commonality. There's kind of a general ebb and flow that a lot of things fall into together in terms of a broader sentiment. But we're looking for, particularly in stock waves, the way that we're looking at lots of the different sectors and then drilling down within each sector, we're looking for those rotation opportunities. So what I wanted to start with was taking a look at some of the charts that Garrett and I were looking at in stock waves heading into the end of the year that were really giving us pause, even though the S&P was making higher highs in December and into the beginning of January, and continually higher highs since November. There are certain things that were really flashing some serious warning signs. So XBI was one of those charts flashing a big yellow warning. I tend to, I try and avoid alternate wave counts. I know that's one of the big criticisms of Elliott wave chartists, is that there's always two different counts. And part of that is true, that Elliott wave, we're looking for figuring out what is the most probable path based on the Elliott wave rules, and also ruling out what is the least probable or very unlikely. So there are, based on the rules and guidelines of Elliott wave, it's possible for two Elliott wave analysts, or even a single Elliott wave analyst, to come up with multiple different interpretations. But within that, we try and rule out the things that are less probable and focus on one, or say, here's two different ways of interpreting it, but both of those overlap, to whatever degree. And sometimes I use color coding on my charts to kind of emphasize different structures. So the yellow here is subwaves is not meant to be an alternate count. We have a larger 5 waves up that completed in the XBI into the early 2021 high. That was potentially all of a cycle degree wave 3. And so we were looking for a large consolidation. We got an initial move down that was most likely just an A wave, could have been an A wave at an even larger degree, and then just had some corrective movement sideways into November and then started to turn down and break support. Going into the end of the year, XBI was one of those charts that Garrett and I looked at and said, you know what, this can easily be a corrective bounce as the wave 2 inside a larger C wave down. So that was one of the big warning signs that we were able to look at and say, you know, maybe not everything pulls back, but XBI is certainly one of those places where if you wanted to make some downside bets, it would be a good one. And into the very beginning of January, it had yet another small 5 waves down and a corrective bounce, and then started to turn down from there. So it was clearly showing a lot of divergence with the rest of the equity market as something that was potentially very bearish. It also now is one of the charts that we think has a lot of good potential upside, even though that looks like it should be a corrective bounce inside a larger ABC down for that big yellow cycle degree wave 4. The upside that we can see on more of a sharp corrective B wave bounce back up towards the 130 region is pretty aggressive upside potential. IHI, medical devices, was yet another name where the move into the end of 2021 in January looked like a corrective flat that was not making a higher high. It was getting pretty close, but so far it was still holding as a very clear corrective flat consolidation after what looked like a very clear top to our wave 3. In this case, counted as an ABC up for a diagonal pattern. That's not something that we're going to get into because we just don't have time. But as that same parentheses wave 3 top that we were looking at with Mike on the Nasdaq chart, the medical devices ETF looked like that same wave 3 top into the September high as part of a diagonal for its larger circle wave 5. And was setting up for a C wave down of that 4th wave into the normal region and that 55 region that we would look at for support for the larger 4th wave based on the size of the wave 3 and other guidelines. This should be an ABC move up to the high into probably well into 2023, but definitely some names that we focused on recently in a webinar for stock waves. Next is XLK. Much like Apple in QQEW, which we also keep a close eye on, the equal weight version of the Nasdaq, the XLK ETF clearly looked like an ending diagonal completing into the end of December. So that was as the 5th wave inside of that parentheses wave 3, taking it into a very, very extended fib target for the 3rd itself based on the smaller parentheses wave 1 and wave 2 that this ETF had relative to the Nasdaq in general, but very, very clear structure for that 5 waves up completing that we were able to say none of these counted as a significant enough consolidation that we were really looking for a larger ABC move down to a wave 4 for a wave 4. And that completed into the March lows at a little bit of a shorter move than we normally see for a C wave, but holding a nice corrective region based on an extended 5th wave here and other guidelines for fib support. And also one of a lot of names in this sector ETF are names that Garrett and I are very bullish on over for the year plus to come. And the reversal that it got off of that low is so far looking pretty phenomenal. Should complete a little bit more of a 4 and 5 to get 5 waves up in that wave 1, very similar to what Mike was talking about on the Nasdaq itself. Hold a corrective consolidation to a higher low, maybe into May possibly stretching into June, and then be very, very bullish from there on to new all-time highs. Since I mentioned Apple, we'll go ahead and skip some of the other ETFs at the moment and talk about the Apple chart in general. And just very, very clear, you know, I forget what the actual percentage weighting of XLK, but Apple is a very significant percentage of that ETF. And so you can really see almost identical structure for that diagonal that we saw. And so this was the name that we said, you know, we really try to avoid arguments for correlation, but it was hard to get overly bullish the market extending and breaking out significantly higher past, you know, the December and January high when it so clearly looked like Apple was forming a more significant top. And here's that QQEW chart. Again, very similar diagonal. This one completed into November, whereas the one in the XLK and the Nasdaq did complete also, but the one in XLK and Apple completed in January here. The QQEW was one of the things that we were able to look at and say, if you look at the equal weight version of the Nasdaq, you know, take out Apple and Microsoft and some of those other things that might be skewing things to making new highs in December and January. The QQEW was clearly making a lower high as a clear corrective bounce into the end of December, and was diverging even more at the very beginning of January, already starting to turn down from that corrective top. It since got, you know, this was enough for all of a C wave, but it wasn't clearly 5 waves down. Then it got more than it really should have for a bounce as a 4th wave. So I've counted this as a more obscure WXYXZ pattern. But both the QQEW and the NASDAQ hit the exact 382 retrace, and QQEW got pretty close there. So tracking a couple different potentials for movement off the low. I think if we can break out a little bit higher more immediately over the 108 region, then we're just filling out a more direct 5 waves up for this green wave one. But the other day when I was building these slides, I was pointing out to our members that we could only count 3 waves up so far. So it was possible that this was just wave 1 of a leading diagonal for a little bit larger wave 1 of the parentheses 5 there. But so far it is holding more like the NASDAQ. XRT, the retail ETF, was another sector that was showing very strong warning signs at the end of 2021. This one had clearly showed that it had completed that 5 waves up for the 5th of 3 into the November high, had turned down pretty sharply as more of an initiation type move, and then into that January high with that the market was making. When I say the market, I'm talking more about the NASDAQ or more in general the S&P. It was clearly bouncing as just a B wave bounce into this cluster of the daily moving averages as a significantly lower high from the move that was made into November of that year. And then it proceeded to get 5 waves down to complete into a spike a little bit below our ideal 382 retrace for the 4th. But a good proportionate move is 5 waves down for that C wave, and is now working on 5 waves up for wave 1 of a parentheses wave 5 that should be taking it well past the 107.50 region. XLY, another one that I like to point out in terms of just very, very clear structure for that diagonal off of the March low as the 5th wave of the parentheses wave 3. This one is an interesting one because while it is very similar to XLK in that regard, the 5th wave here truncated. So it would have needed to hold support in this 195, 197 region to get one more high. And the fact that it dropped down to a lower level, almost breaking that trend line, and then only got a corrective bounce at the beginning of January, had us very worried that that was all of the 5th wave there as a truncated top. So that's where the blue 5 made a nominally lower high than the 3rd. So even though this is the actual orthodox top, of price, this is where we're counting the Elliott wave structure off of for the A, B, C to move down. The other interesting thing here is that just like this move truncated as the fifth wave of the fifth wave of the C wave in our parentheses wave 4 also looks to have truncated at the March low. Because it did not actually get a lower low under February 24th, but does look like it is on its way to getting our 5 waves up for wave 1 of that parentheses wave 5. ITTA, I think, is the last of the ETFs that I wanted to show you guys. This one was diverging significantly, and one of the things that we were continuing to be bullish about because it filled out more of a larger correction from May into the November low. And then we were able to be very bullish from there. And even though we were longer term bullish, we did see a clear ABC structure heading into that January high, got a little bit of an extension beyond that, but was due for a wave 2 retrace. And maybe you could even count this as the wave 1, and then this is a B wave high. But we can count that as an ABC down, held as a higher low, which was always, a must for a wave 2, and then has continued to be bullish from there. So we do see nice continued upside in the aerospace and defense sector. Now on to a couple individual names, and then we'll leave some room for questions. Goldman Sachs is another one of these charts that had a very clear ending diagonal completing into the November high. And so it started its A wave of that parentheses wave 4 to the downside well ahead of the rest of the market. So when the market was making those higher highs in the end of December and January, Goldman Sachs is one of those stocks that was clearly looking like an ABC bounce as a B wave at a significantly lower high into that corrective retrace support, and then setting up for a 5-wave move down as the C wave, again held right at that 382 Fibonacci percentage retrace of the entire third, and is starting its 5-wave move up to new highs in the 500s as the parentheses wave 5. FFIV had a very nicely complete third inside its larger third. And one of the things that, we didn't have time to go into details of Fibonacci Pinball, but one of those is that the subwave 3 inside of a larger third will often tend to head towards the 100% extension. So when we could see 5 subwaves inside that 3 completing at that 100% into November, we knew that we should see more of a wave 4 consolidation. So even though this headed higher in December, still looked more like the B wave in what should be a wider flat for the 4th wave. And this got a pretty significant drop on earnings, but then started to reverse right off of that after spiking a little bit below that ideal 382 retrace, and should be heading, when our wave 3 hits the 100% fib, the 5 of 3 should get to the 1382. So there's a nice high probability target there for FFIV up in the 297 to 300 region. Google, yet another large tech name that very clearly looked like a top to its wave 3, the parentheses wave 3, inside the larger 5th into the November high, and was showing clear signs of divergence into December and the beginning of January as the start of the C wave already. At the time, this low ahead of earnings could have counted as all of the 4th. It was a little bit shallow, being at only the 236, not all the way down here at the 38.2% retrace, but it was large enough in comparison to this smaller degree wave 4 that also only held a 23.6% retrace, that we were fine counting this as all of the 4th. So we were bullish heading into earnings, but the way that it spiked up on earnings, while it seemed very bullish to lots of people at the time, was more than what we were anticipating. So we were pleasantly surprised there. But we know from experience, a lot of those types of earning moves are not going to stick and are going to get faded back, at least a significant portion of them. So if this was starting the fifth wave, then it was likely this was already all of the wave one and it was going to fade as a wave two. But we showed our members that there was risk here in Google of getting that C wave down of a wider flat, which it did go in and make a nominal lower low from the January low into March, but now is working on the same 5 waves up that we're looking at off of, or sorry, February, off of the February low. It held a higher low in the March drop, but working on that 5 waves up for wave 1 of 5 now. US Steel, yet another one of those names where it clearly looked like that larger parentheses wave 3 topped well in advance, and heading into the end of the year, this was potentially a 1-2 start to a C wave, similar to XBI, but ended up looking more like this was all of our wave 4 completing right at the 382, but as a WXY. So this is one of the names that Garrett and I included in our 2022 shopping list that we were very, very bullish on. And then into the February low, this had already looked like 5 up and 3 down as the 1-2 start to the parentheses wave 5. And it is now reaching all of the target. It hit 38.58 today, I think, but we should still get more of this 4-5, I think probably closer to 41 for US Steel. Let me do one more and then we'll open it up to a couple of questions. Microsoft, another one of those very, very large tech names. Very different structure from that we looked at in Google and Apple, but similar, even though it's a very different subwave structure, it's still working on this larger circle wave 5. And the November high was also its parentheses wave 3. It was an ABC move up inside a larger diagonal to get to that wave 3. But again, into the end of December, we saw what looked like a very clearly corrective ABC flat for the B wave, and we were looking for more of a drop. This move really only projected to about here, and then we could have gotten a bigger bounce and then another low, and it would have been, this would have been just the A wave and a B wave, but it decided it wanted to go for broke and get all of a much larger C wave down towards that 382 retrace target. Sometimes a fourth of a diagonal can drop a little bit deeper than that. So when it retested that earnings drop again in March, it did spike a little bit below that, both of those previous lows, but working on a nice ABC move up for that 5th to new all-time highs. All right, I'll go ahead and stop there and see if there are any questions. If not, I can have a couple more slides I can plow through.
We have a couple of questions ready for you. The first one is, what was the projected high for the Nasdaq 5th wave?
The parentheses wave 5. Let me see if I can.
That's the first slide, Zach.
Right. Don't get dizzy. There we go. So Mike has a pretty large target box here.
I think that's the INDU, Zach. That's not the Nasdaq.
Oh, okay. Oh, it's not on the larger 5th wave isn't on there. Let me see if I can share. Well, I'm scared that if I try and shift this, I might lose something. On my chart, I have the 5 waves up for that parentheses wave 5, easily taking us closer to the 20,000 level on the Nasdaq, and potentially extending from there on up towards 21,500, because I mean things are going to be pretty crazy and euphoric at that point. So what's another 100 or 1,500 points on the Nasdaq once you're already at 20,000?
And just to chime in, Zach, if you could flip over to the next slide, the smaller degree NQ chart.
Yeah.
So also, once we get this wave 1 completed here up into around the 15,500 level, we can lay some better projections on from this smaller degree wave 1. And that'll give us usually we get what we call Fibonacci Confluence, where we have Fibonacci price levels of multiple degrees. So once that wave one is completed, we can lay out some fibs and get a better idea of where that final fifth wave will project.
Right. So once we have what looks like 5 waves up complete in place, whether it's at 15,500 or a little bit higher than that, then we can snap that wave one in place, as Mike was saying, and then we can draw our target box for our standard Fibonacci retrace for the wave two. And then once we start to see an ABC filling out, then we can say, all right, that really looks like it's going to hold the 382, or it's going to hold closer to the 50 or the 618. And then once we can snap that in place, then we can use our Fibonacci Pinball projections for narrowing down the price targets for wave 3, as well as where 4 should hold, and then as well as the potential extensions for that 5th wave of the 5th.
I think that just about covers it. Moving on to the next question. Someone's asking, so you guys don't really foresee a market crash or recession in the next few years?
I don't know if I mean, it's all a relative. I think this is, I don't know if I have a cleaner version of this chart that doesn't have all the fibs on it. But we're pretty close to the end of this larger move that, for the Nasdaq at least, started in November 2008 as a cycle degree wave 2 bottom, and we're filling out 1, 2, 3, 4, and we're starting that 5th of the circle wave 5 of that cycle degree wave 3. So once that completes, then we're due for a larger cycle degree wave 4. Now, I don't think that's the end of Western civilization, but that can easily be a correction that is on par for the Nasdaq with the 2007 to 2008 drop in terms of degree magnitude. That doesn't necessarily mean that the Nasdaq is going to drop, 54, 55%, but a normal consolidation from the 20,000 region could easily be, 45 to 50% at just a higher level of normal Fibonacci support that we look for. There's different, this was a sharper drop, that 2007 to 2008 drop. So it's possible that once we complete this parentheses wave 5 of the circle wave 5, that maybe this is kind of a choppier, more sideways correction through time, and not as sharp of a drop like we had in 2007 to 2008, but it will be the same magnitude degree on our charts.
Thank you so much for that. I think a lot of our audience are going to be hunkering down till, what is that, July 2027? So thank you so much for that insight. And with that, I think we're going to have to end it, unfortunately.
Thank you so much. It was a lot of fun.
Once again, to all of our attendees, that was Zach Manis and Michael Golembesky. You can feel free to check them out each at elliottwavetrader.net. And with that, we are signing off.